We did see some bit of a dip that did come in intraday trade, and this was mainly because Gary Cohn, who said that he is going to resign as Trump's advisor, and this is mainly on the back of the disputes over tariff wars as well. Now, on the back of this news, if you see in terms of Dow as well, we did see a dip of almost 140 to 150 points in intraday trade, but a mild recovery that did come in towards close, and we did close at pretty much flattish levels. Let's quickly welcome in Peter McGuire, CEO at XM.com. Welcome to the show, Peter. Overall, 2 days ago, I mean, we have seen some bit of a positive move in terms of where, U.S. markets go. In terms of yesterday's session, Gary Cohn has come out and said that he's planning to resign as Trump advisor on the back of the disputes over tariffs. What's your first view on that?
Well, good morning. A couple of quick things. First off, yes, I think it's certainly hit the markets fairly hard, and there's a fair bit of volatility during the night trading in New York. Though when I look at Asia today, it seems to be picked up across most of the Asian belts, Asia Pacific that is. Australia's down, but certainly Japan, China, and a lot of those major markets have had a nice day. Let's see what happens in today's trade and how that wears into tonight. But certainly the talk as far as tariffs and all of those points with President Trump are causing a great degree of concern or ambiguity across the markets.
Peter, good morning. This is Piyush here. The question is that please decode that for me, what is happening in the currency markets also here. If I look at the dollar index, no major sort of high, 89.5, mild weakness, 0.1% down here. If I look at euro here, again, the trend actually has been stronger, trading above 1.24. A couple of sessions back, we were actually seeing euro trading below 1.23. So there has been a material rally in the euro. Pound actually has not showed that kind of rally here. So what this indicates in terms of sentiments, in terms of what actually traders and investors they are playing on the trade war scenario also, but broadly in terms of the reaction here.
Well, I think first off, when you put your mind back, Piyush, 3 months ago, we had the dollar index nearly at 94. In those 3 months, we're now at 89.5. So we've seen a very solid sell-off. Yeah, and I understand what you're saying as far as, euro strength in that period of time. It's been a very, very strong trade. As far as the UK is concerned, there's so much, again, uncertainty with the Brexit issues, how that rolls forward. And, of course, the UK isn't performing nearly as strongly as what the Eurozone is. So that could be a major, handbrake there to see any uplift as far as, pound strength against dollar. So that really is, from a trader's perspective, I think, the bulls are certainly piling into that euro trade with a lot more vigour than what we've seen as far as pound, as far as those economic fundamentals.
Right. So Peter, my question also had a backdrop here, and the backdrop is that if I look at yen, it's at 105.67. That's actually material sort of upside we have seen over the last few sessions here. Also indicated some sort of a risk aversion here. And also then I'm looking at Thursday and Friday events here, the ECB policy meet and then BOJ meet here, and then those also actually are going to affect the stock markets also here. So when you look at that, and when you look at the currency and also the central bank meetings here, and then again, in terms of sort of impact on the stock markets, what's your own perception where we are right now, and what could be the reaction which the market could be contemplating towards the end of the week here?
Well, if you put your mind back again a month, we've seen that yen from 109 to around about that 106 level, 105.50. So it's fairly, dramatic move in that short period of time. Yes, we've got those numbers coming out as far as BOJ. And that'll be coming out later in the week, I think around about 4 o'clock on Friday, the monetary policy. So taking on board all of that, we're fairly sure that you'll see Japanese interest rates short-term remain unchanged at about 0.1, negative that is, negative 0.1. And the target 10-year Japanese government bonds probably around that 0%. So, you're looking at, core inflation. Certainly, we're trying to see some uptick there, and I think it'll be probably under what the BOJ is asking, that 2% sort of target range, annual target. I can't see us getting closer to that. So, there's, again, as the Japanese currency and the Japanese economy starts to tick again, we're going to see, a stronger 2018 to really get some sort of semblance as far as what we see in 19 and 20.
And also, Peter, I'm seeing weakness in the Asian currency trade today. And I'm just trying to extrapolate because on the stock markets, yesterday was a very weak trade for the Indian markets. If I look at the US markets again, that's actually showing some weakness. Asian markets trading with weakness here. If I look at currency market, that is showing me weak cues broadly for all the major Asian currencies, barring Indonesia and but I'm barring Malaysia also, but broadly all the Asian currencies are trading weak here. So what's your own perception on the Asian EMs here? Are you sensing from your clients, from what you have been hearing, are we sensing some sort of weakness in this week or maybe today? Is that some sort of trade which is emerging here?
Well, we could well see Piyush a bounce back as far as that US dollar. It's been fairly heavily sold off. There could be a little bit of a move, as far as a bounce. The traders are very mindful of it, and they're keeping their eyes, very much glued to the screen. We're seeing, again, reasonable volatility over that 24-hour window. Whilst it might be going sideways, the volatility moves over that day period are fairly strong, and that's where a lot of traders are, making, I think, very strategic moves as far as what they're seeing as far as trading and of course, profitability. So it's a delicate situation where one thinks markets are going to trend in the short to medium term. But yeah, as long as there's movement, you've got happy traders, Piyush.
Right. Peter, staying with Asian markets as well, right now the talks are going on that, yes, China's economy is expected to overtake, the combined Eurozone area this year. Currently, in terms of, emerging markets as well, do you think this could be a possible trigger which could probably aid markets in the emerging markets?
Well, I think so, absolutely. I mean, it just gives you some sort of depth and some sort of reality check, the size of this Chinese economy, surpassed Japan, now going for the size of Euro or the Eurozone, and then the next target naturally will be the US over the next couple of years. So there's no doubting its appetite and its global, I suppose, trajectory and the sheer volume of, GDP coming out of the nation. Whilst we say that, growth has slowed a little bit, it's still, remarkable across that whole region and globally what its appetite is for, many different energies, foods and whatever else across the, pretty much of the Africa and the Asia regions as well. So, yes, whilst we do see that, I really do think that, the strength is just going to remain for many years to come, and they will be the number one economy in the world in the next couple of years, and it's very, very hard to stop them. There just seems to be, momentum is building month on month, year on year.